Hi traders, you're welcome to attend our next Currency House online webinar. And today we'll talk about oil, a huge market of fuel all over the world. And today we'll talk about one interesting currency pair, which is United States dollar versus Canadian dollar. And we'll try to figure out, is it the top trade heading into 2017? Let's try to understand what our topics today, and let's try to figure out what are the main key points of today's webinar. And here we go. First of all, you understand that we have to talk about key points of history of oil in 2016, because this year was enormous. It was very, very huge in the sense of this market, and we saw dramatic fall down of oil in the beginning of this year. We saw lots of things, and we'll talk about prices of oil into year 2016, and we'll try to understand what are the levels, what are the next movements in the year 2017, and how can we make profit on that. We'll talk also today, we'll talk about fundamentals and technicals of USD CAD, which is a very interesting pair. And you know that Canadian dollar, Canadian economy is always dependent on the price of oil. Canadian people, they export lots of oil. It's huge, enormous amount of export of this asset, and especially they are dependent on the US economy, because United States of America are the best, the most biggest consumption market of oil. So Canadian economy has always been dependent on that, and we'll talk about this as well. We'll talk about Canadian economy and what are the situations at the moment, how can we benefit on that, and of course lots of technical analysis. You will see lots of charts, and I will show you a couple of tricks and very interesting key points how to make money on that. And of course we'll talk about benefits, we'll talk about profits, pips, and how can we trade on these assets combined, on these assets together. So let's not waste our time, and let's go to the platform. Let's switch to the platform and open up a couple of interesting charts. First of all, we have to open a long-term chart of oil. You can see here weekly chart. So one candle is 1 week, and you can figure out from this picture that it's a rather long-term chart, because it starts from the year 1998. So lots of analysts and lots of traders worldwide, they say that price of oil is in a long-term uptrend. Well, I would ask them a question. Can you show me a long-term uptrend here? I do not see it, honestly. What I see here is a long-term downtrend. You see this yellow channel, and we can see that the price of oil bounced back very, very sharply. We can see that it's going down. Let me try to show you a couple of things. First of all, this blue line is a long-term support. It's been a support line more than 12 years. And you can see here that the price of oil nowadays is still below this line. So my point is that we didn't break it through from the downside. And until that, we're in the downtrend. Next is this very interesting yellow channel. It's definitely going down. You can see here several attempts to break it through on the downside, and all of the last movements in the year 2016, it's just a bounce back, it's just a retracement, a correction of that huge downside movement. We can see sell-off in the year 2008 of the huge financial worldwide crisis. We can see sell-off starting from early 2014, and you can see a huge massive downside movement from the year 2013. So my point is that all of this movement that we observed in the last several months, it's just a correction. It's just a retracement. And before the price, until the price is below this blue line, and until the price is below this yellow line, which is the middle of that downside yellow channel, we wouldn't talk about an uptrend. Of course, it seems like the price of oil is heading to break this level, and they got everything that they need in order to break it. But before the prices are below those two lines, we're still in the downside trend, when in case, of course, we talk about a long-term positioning ourselves. Let's try to understand the fundamentals. But before that, I would open another chart of oil. You can see here a daily chart, and this is just a confirmation of the words that I was trying to say about the downtrend. You can see here a huge movement on the downside from the April of 2014, and this thing is the Fibonacci retracement levels. It's a very important thing for the technical analysis. I wouldn't get you tired explaining you the details of it. Just believe me that all of that levels are very important and crucial for the technical analysis. So this is the movement that we observe, the downside movement. And of course, yes, we have broken. The price of oil has breached the level of 23.6%. A retracement from that movement, yes, and we're going up to the level of 38.2% of the retracement from that downside movement, but still we're below that level, and it's rather far to go. You can see that it's more than 600 pips to go on the upside before we even try to test that retracement level. So my point is that until we're below even this level, or the level of $71.38, which is the 50% retracement from that downside movement, until we're below that level, we're still in the downside, and all of that last movement in the year 2016 has to be considered as retracement. Still, at the same time, we're above the moving average with the period of 89, which is also one of the Fibonacci levels, and it seems to be that the trend is strong. I mean, the retracement in 2016, and definitely my point is they will try to test that blue and yellow line in the upcoming days. What is going to happen next is a very, very open question, because in case if they will fail to break through this yellow line and this blue line, definitely there will be a pullback, there will be a downside movement even below the level of $50 per barrel. So in order to understand what I would add here is just another simple moving average with a larger period, say 200 days. Oh, sorry, simple moving average with a period of 200 days. Let's make it red. What do we see? We see the same. So my point of the technical analysis is that the price will try to test this level of 62 US dollars per barrel, and most probably they will fail to go through this level, and most probably we will see a deep retracement, a deep pullback down to the level of 50 US dollars or even below. But this is just one part of analysis, it's just a technical analysis, and we have to understand what are the fundamentals components of this asset, of this commodity. And there are lots of them. I should say that it's not the easiest asset to trade. And why? Because the market is huge. Just imagine that all of people need fuel. Lots of people need oil, gasoline, and all of that stuff to move all of the goods just to go. And all of the economy is dependent on the price of oil. So we should highlight the biggest markets of consumption, and of course it's United States of America and China, which is also very, very important for the worldwide economy. So it's not just a question of supply, of the volume of consumption of the oil. It's also a question of the demand. And as we see from the year 2008, the worldwide economy struggles to have a sustainable growth. And the question of the downside movement, as we observe from the year 2008, is just because worldwide economy doesn't need so much volume of oil as producers would like to have. So fundamentally, the consumption is one of the most important question for the price of oil. Worldwide consumption, I mean. And from one hand, we see a strong sustainable growth in US economy. We see that consumption in this country could go up together with the growth of the economy, but still the worldwide economy in the bigger picture doesn't show such a sustainable growth. So this is one of the reasons why Organization of Petroleum Exporters countries, they had a meeting this year, and it's a historical event. It never happened in lots of years. They decided to cut oil production. Now just imagine that lots of Arabic countries exporting oil and having billions and billions of dollars of the profit from this business. Just imagine they have to decide to cut the production. So my point is that even powerful players on this market are trying to get very, very strong efforts in order to get the price of oil on the upside. But still, I suppose that this growth is not as much sustainable as it could happen, because the historical event, all right, the analytics say the price of oil surged 14% in one day just after the OPEC meeting, but still, take a look at this picture, at the long-term picture. This uptrend is rather weak, let's be honest. So, what should I add about the oil? We all remember about the wild card on the hands of worldwide economy, about a wild card which name is Mr. Trump. Let's just try to understand his needs and who are people behind them. It's very easy to understand that Mr. Trump, they call him kind of Mr. Corporation. Lots of analysts say that the efforts from his side will be to put everything on the business track. So most profitable most profitable people from Republican Party will be corporations, and you understand that the oil producers are among them. Moreover, you can see that the candidate for US Secretary of State is the former CEO of ExxonMobil, which is one of the biggest producers of the oil worldwide. So my point is that all of people with power in US, they will try their best to get the price of oil on the upside. Why? Because you cannot get profit with the lower prices of oil. So this asset is not that easy to trade. This asset is rather complicated, but still at the same time, just imagine the huge volume of trading of oil. So, assuming all of that, my prediction for the price of oil in the next upcoming weeks or even 3 months of the start of 2017 is that they will try to test this level of $62 per barrel, and in case if they fail to have a sustainable breakout of this level, we definitely will see a pullback. In case of something strong for the bulls of oil, we definitely can see the attempts to try the level of 50% retracement from this downside movement, which is 71 roughly US dollars per barrel. This price of $71 is, let me try to build a horizontal line. Yeah, it looks like a very achievable level, but after this we could see a pullback. We could see a retracement on the downside, probably even lower to the price back of $50 per barrel. And one of the reasons why is just because all of the efforts of Mr. Trump and all of the efforts of Republicans, they can have an impact, a temporary impact, because you understand that everything that is growing is just on the expectations. Just imagine that it's been a month that Mr. Trump has been elected. Okay, 6 weeks, but at the same time we suspect that lots of his promises will remain promises, and especially if we talk about worldwide economy. Okay, he can make a huge impact on US economy, which is a worldwide leader, but would he be able to make a sustainable growth of the worldwide economy, especially if we talk about such a huge market of consumption like China. There is a big question in that, and definitely we'll try to see the answers of this question in the upcoming weeks. Alright, next point for us is the USD CAD, which is a currency pair that always comes together with the price of oil. And the reason why is just because the Canadian economy is always dependent on the oil production and oil export. And you understand that one of the biggest, I should say the biggest consumption market of oil production and oil export from Canada is United States of America. So let's try to see the technical picture first, and we'll get back to the fundamentals right after that. So we have switched to the US dollar, Canadian dollar. It's a currency pair. It's a long-term chart, a weekly chart. So, well, it's an interesting pair. It's a very complicated pair. But at the same time, in case if you get the right prediction of USD CAD, you could have strong and very good profits. So let's try to understand what do we see here. First of all is the yellow line, which is a median, which divides all of the prices in this long-term chart by two halves, and you can see that everything which is below is the downtrend and everything which is above is the uptrend, and we definitely see an uptrend here starting from the year 2012. Even before that, we can see here a strong blue upside channel. We can see that the prices of all USD CAD are above the green line, which is a simple moving average with the period of 89 weeks. Just imagine, it's almost 2 years. So and we can see here that the price of USD CAD is being supported, it's been above this line for rather long period of time. We talk about the period of time from April 2016. But at the same time, the prices are not going at a huge uptrend. I mean, we see a definite uptrend in the year 2016, but not with such huge movement as it was before. For example, in the year 2014, you can see that the acceleration of the uptrend is much faster. So technically there is one more line which is also blue. It's just a half, it's just the middle of the range of the uptrend, starting from this date. You can see that the price of USD CAD has found a resistance, and this blue line is showing us exact resistance that we have to break before we will be able to show some kind of very strong figures and try to get on the upside range of this channel. So technically we see here an attempt to break this middle blue line, and in case if the prices will show sustainable break of this line, we definitely will see the continuation and even acceleration of the uptrend. Let's switch to another chart, which is a daily, and again the Fibonacci retracement. We can see an uptrend here from the May of 2015, and you can figure out here that after this huge movement, we had the retracement down to 78.6% of this move, and right after the April of 2016, we definitely see a strong daily uptrend, and now we have a second attempt to break the level of 38.2% of the retracement level from this huge movement. And I will tell you that usually the third attempt is much more successful. So uh, technically, let me show you one more chart. Technically, we're on the uptrend for this pair, USD CAD. We're above, again, this simple moving average. We're in this yellow channel. Moreover, this this yellow line is not just a resistant line, it's the median, which is also dividing the prices into half. And definitely all of these charts are looking on the upside. And we can see possible tests of this line in the very, very nearest future, but with a possible pullback to this level, something like 1.3280, before we have a third attempt to break this level of 36, and before we have a sustainable breakout. Let's try to understand the fundamentals of this pair. Let's try to talk about the outlook of Canadian economy. Well, first, as we already said, the Canadian dollar is always dependent on the price of oil. And it's just because the Canadian economy is dependent on the export of this commodity, and the US economy is one of the best, one of the most biggest consumption market for the Canadians. So definitely Canadian dollar is always going up together with the price of oil, and the USD CAD is always going down when the price of oil is going up. But at the same time, we see sustainable growth in US economy. We see rather hawkish comments from Federal Reserve, and we do not see such a growth in Canadian economy. All of the reports recently are not showing that Canadian economy is heading to the growth at a sustainable pace, and Canadian Central Bank, they do not have any reasons to hike the interest rate the same way as Federal Reserve does. So moreover, you can try to Google, you can try to find a YouTube channel of official channel of Bank of Canada, and they have released just this weekend, not so far time ago, they have posted an official video, an official explanation that they predict possible crisis in the home, in the mortgage, I mean lendings for the householders, and this could cause a huge bubble in the Canadian economy. It's the same level, it could make effect on the same level as it was in 2008, just in the US economy. So my point is that we do not see any signs of Canadian bank, a central bank, that they will hike the rates. Moreover, the Canadian bank could even cut the interest rate. So this could cause a strong a huge gap between US and Canadian interest rates, and it could cause a huge speculative flows from Canadian dollar to US dollar. So in order to prove all of the words, I would show you another chart. Basically, we talk about two charts at the same time. It's a daily chart. Here on the upside, we see the chart of oil, and here is the Canadian US dollar versus Canadian. Both the same periods, the same time frames. What do we see here? We see a mirror, right? The USD CAD is going on the opposite direction with the oil, just because the Canadian dollar is always dependent on the price of oil. So we can see a mirror. In case of oil is going up, the USD CAD is going down, and we see the continuation of all of the same story. But if you can take a look at the period of time starting from the middle of the summer in the year 2016, you can see a huge divergence here. Wow, we see that the price of oil started to go up, and at the same time we see here that the USD CAD is also going up. So it means that the Canadian dollar weakens despite the fact that the price of oil is going up. So it's a very interesting thing, and this could start a huge, enormous movement in this pair, I mean USD CAD. And if we talk about the fundamental reasons, is just again, just try to compare US economy, which is growing, and the Federal Reserve is just have started a whole series of rate hike, and at the same time the Canadian Central Bank, they don't have such a room for the movement. The Canadian economy is not showing such a growth as US economy. So that is one of the main fundamental reasons why we see such a divergence. And what should I say is that in case of the fundamentals are showing the reasons of growth of USD CAD, well, you can just throw out the technical analysis, and you have to understand that fundamentals are always above and much more important than the technical analysis. So, assuming all of the things that we said, this movement of the USD Canadian, this sign of the divergence, could get us to the huge upside trend of the USD CAD. And you can see from the long-term charts that the level of, for example, 1.60 is not that huge level for this pair. We have seen this level in the early 2001, 2002, in these years. So according to the strong USD trend, we could predict such a movement. And take a look at this. It's more than 2,500 pips to go. So what should I say is just we have to be aware of that possible scenario, and we have to take a look very, very closely at the Bank of Canada press conferences, decisions, and all of the comments from the official governors of that central bank. That's it for now. That's it for now. Let me try to tell you a couple of things about our possible plans, and I need to explain you a couple of things. Well, you can watch our previous two webinars from the last week on our YouTube channel in case if you missed them. My point is that all of those webinars are just trying to build the base for the trading in the year 2017, and let me share a secret. Okay, we have a Supreme Trader subscription. We have kind of a list of private exclusive traders in our company, in Currency House, and they get some kind of a support from our side, which includes weekly inside reports, all of the information from the markets, the weekly updates, the trading signals, lots of active webinars, and especially the phone calls from our brokers, from our professional traders. And we should say that December has been rather profitable for such a report. We have made more than 1,400 pips of profit for clients, and it's just, and you understand that the main idea is to get the analysts report. So the main power of this market is information and the understanding of the basic reasons. Why do we have such a movement? Why do we have such trends? And what are the predictions for the upcoming month? So, well, yes, it's confidential, but we have decided to give such a support to all of the clients in our pipeline, to all of the Currency House clients. So let me show you next page. We have a Supreme Trader subscription offer, which includes weekly in-depth analysis report delivered to your inbox email. It will be sent, it's sending every Monday morning, something like 10 a.m. GMT, and it covers the most significant events during the past week, and it covers the upcoming week in the sense of economic calendar, in the sense of how can we be ready for to trade, for positioning ourselves and to make profits in the upcoming week. So you will see the highlights of the upcoming week, you will see the possible predictions, you will see the possible scenarios of movement in such a report. Moreover, we have a weekly exclusive webinar which will be covering fundamental and technical analysis of the hosted assets in the market. This weekly exclusive webinar will be tentative and it will depend on the economic calendar. But it will have at least one weekly event. Moreover, at least one weekly live news trading event. This will be the coverage for maximum pip gain, and we will highlight one of the most important, significant event of the economic calendar, and we'll talk live. One of our professional traders will try to understand, will try to give you the information of how can you make money on such a report. You will see all of the background before making the decision and the possible scenarios. So this weekly live trading session is having a huge support for our clients, and people can make money live with the support of professional trader. And of course, we'll talk about daily trading signals. So those are exact recommendations of what do you need to buy or to sell on a daily basis, but not just signals. it will have a deep explanation of the background of the reasons why do we think you have to put such to make such a decision, and will cover lots of assets, so you will have plenty of choices to make your decision to trade and to have the profits. The price of such a subscription is $50 per month. In case if you want to subscribe, in case if you are ready to make a couple of questions or you need to clarify something about the Supreme Trader subscriptions, please feel free to write an email at andy@currencyhouse.com. And this subscription starts from Monday next week. You're welcome to ask me questions. You're welcome to subscribe. And in case if you want to get a year-end deposit bonus, or you'd like to trade entering next week, you are welcome to send an email at this address that you see on your screens. You're welcome to ask questions, and we can negotiate your personal conditions for your deposit bonus in case if you want to join Currency House and make profits with us in the year 2017. I really thank you for your attention. I really wish you to have a nice holidays, and I hope we'll see each other on the upcoming new year of 2017. Happy New Year, and let the profit be with you.